Hi, this is Daniel Kitwa from the Startup Evangelist, and I'm joined by Sewu-Tawia, a very accomplished C-suite leader, tech and investment advisor. You have deep expertise in, VC, private equity, strategy consulting. You have worked, nurtured, and scaled startups across Africa. In various sectors, healthcare, I know we'll talk about it, biotech, agri-tech, fintech, climate tech, etc. A pleasure having you. Welcome on board.
Thank you very much, Daniel, for having me. It's a very nice pleasure to be on the Startup Evangelist.
Thank you. And maybe to start us off, from your background, you've worked quite a lot with startups and early stage ventures in Africa.
Mm-hmm.
Maybe, tell us a bit how it started. How did you get there? Obviously, with a person of your background, there's a lot you could have done, but you focused on this sort of niche. Yeah.
Absolutely.
Yeah.
The story is really funny because it started when? 2008.
Yeah.
In London. So I was doing a master's in finance at London Business School. And at a dinner, we were with friends, my cousins, and other friends. And then this lady, Ghanaian British lady, approached me saying that she's setting up a company to essentially produce, make and distribute Ghanaian food in London. So I thought it was quite original. And then talking, I decided to invest in the company. The company was named Chop Pot.
Chop Pot.
Yeah, and the idea was essentially to provide jollof rice, bonku, and tilapia, or a lot of the West African food, because instead of eating a sandwich, you could eat that as an African in diaspora in London. And so, she asked for an investment. I put some money in. And then that's how I got hooked up. There's so many stories I can tell about these investments, but that's how it started. Yeah.
Interesting.
Yeah.
So, it's sort of like you are away from Africa, but in a way, backed an African founder who's trying to bring products to Europe.
Absolutely.
Interesting.
Yeah.
And maybe just a bit on that, how has that evolved now from just being that one-time discussion or conversation to almost, something that consumes most of your day? Yeah.
It's funny because when I made that investment, I did not know what an angel investor was.
Mm-hmm.
I was starting to know what a venture capital private equity was because I was interested. That's why really I wanted to do the master's in finance, because I had a financial engineering capital market background. I was a trader, exotic derivatives trader and broker. So I wanted to change towards corporate finance, private equity.
Yeah.
And so that was a good idea, like good opportunity to do so. But I wasn't really seeing myself doing that as a full-time job.
Yeah.
It's only when I got a job in Luxembourg for the European Investment Fund, that is a 40 billion euro fund of funds and investor, I really got hooked into the ecosystem. But it's really when I moved to Ghana in December 2014 that really started in earnest.
Yeah.
And so, I fundamentally thought to myself, look, there's so many young people on the continent doing great things that instead of talking, let's do.
Yeah.
And that's how, I really started. I must say, even being remote, I was already doing projects in Ghana. I used to have a bee farm producing honey and propolis. I used to help people do what we call in Ghana work and pay taxi. So I'll support a young man or a lady to have a taxi. And then I buy the taxi, they run it. After 2 or 3 years, they pay us back the money. And then they can have the taxi for themselves, right? So we're doing different things like that. I must say those journeys have taught me a lot. And then, just generally, providing value, investing in young people has been my experience over the last, 12 years now. 100% of the companies I've invested in so far are in Africa. And really quite diverse, from cybersecurity, fintech, to even restaurants, supported restaurants here in Ghana, in Kenya, and Ghana as well. Agri-tech, climate, etc., etc. So
interesting. Would you say the investing by accident is almost a good way to start? Because I've met a few people who want to do it, but because they've read articles, horror stories. They sort of get cold feet and they never do it. And I don't know if
nah. So I must say, because I've been quite active in the angel investment space across Africa.
Yeah.
I mean, if you actually do it on your own, it's okay, but you will learn by making very foolish mistakes.
Yeah.
Right.
Yeah.
And that's how it happened to me. I was lucky enough. I have limited losses.
Yeah.
But as an angel investor who teaches others through the African Angel Academy, the NABANs, the Accra Angels, VBAN, etc. It's very important for you to tag along people who've done it, and then invest initially in a sector that is where you have much more value addition than other.
Yeah.
So
what you can provide more than just capital.
Exactly. So I don't think today you can go alone, do your own thing because you have a deep sector expertise. But if you're not sure, tag along people who've done it, learn from them, learn with them, and by providing your own value instead of just thinking, I'm not going to do it.
Yeah.
As usual, it's always the first step that is the hardest. After that, you get to know the person.
Better.
Yes, exactly.
Yeah. And then now that you've evolved over the years, you kind of split your time between Ghana, Nairobi.
Yeah.
So you sort of see both worlds, how the West African markets versus East Africa. Maybe from your perspective, what are the areas do you see that there's a bit of difference in terms of how we approach angel, VC, or entrepreneurship in general? Yeah.
I think what I'd love to start with is the similarities before the differences, right? So between West and East Africa, I think there's something that people in East Africa don't realize is that East Africa is more homogeneous in terms of, to some extent, population, but especially language, right? Like Kiswahili is pretty much spoken everywhere, more or less everywhere across East Africa, except for Ethiopia, where it's Amharic and Oromo.
Yeah.
But in West Africa, you already have to split it between Francophone, Anglophone, number one.
Yeah.
And two, there's so many languages as well, right?
Yeah.
And the cultures are a bit different.
Yeah.
What I would say is that if I compare broadly East Africa to West Africa, it seems to me that a lot more people have more risk appetite. Even though you may complain in Kenya or Tanzania, Uganda, that people are not putting money.
Yeah.
I can tell you in West Africa, maybe except for Lagos in Nigeria, most people are very, very, very risk averse.
Really?
Yes.
Wow.
So that's number one. That's the difference. I think the similarities really are around the appetite for fintech. That one, it's very common. More appetite also for agri-tech. I think fintech and agri-tech on both sides are, two sectors that are really prime. I think in Kenya now, mobility with the EVs, etc., has picked up, and there's a lot of talks about that. And the other one also, I would say that is very much ahead of West Africa is anything that is related to renewables and climate investment. I think it's much bolder here than in West Africa.
Yeah.
And especially when you have a giant like Nigeria, 230 million people nearly, that is mostly powered by generators, right? So there's a lot of leeway and opportunities in that space to do a lot. So that's kind of the way I'm looking at things. And mobility also is coming very, very much so. But I think, as I said, culturally, the risk appetite is much higher in East Africa than in West Africa.
Interesting. I would never have imagined that because, from the way we read, I think there's always skewness. Nigeria skews the data in terms of the number of angels, and you kind of think that represents the whole of West Africa.
Actually, let me give you a statistic. West Africa is probably about 400 million people.
Yeah.
Out of those 400 million people, guess what? Nigeria is 230.
Yeah. So half of...
Yes, exactly. Yeah. And so more than half. But then in terms of land mass, it's probably 30%.
Yeah.
Because you have all the Francophone West Africa, Chad, Burkina Faso, Mali, Niger, all the way to Mauritania, who are Francophone speaking, and you go all the way down. The only few other countries that are English speaking are Liberia, Ghana, and Sierra Leone. That's it. So landmass-wise, 80% is Francophone speaking, but population-wise, Nigeria that trumps everybody.
So in terms of the demographics and all that capital, they sort of skew it for the rest of us.
Yes.
Interesting. And then are you seeing both regions maturing at the same rate, given you've said agri-tech, fintech, these are similarities, but obviously the entrepreneurship or the risk-taking culture is still different. Are there paces you are seeing, like, Nigeria is taking off, or West Africa is taking off faster than East Africa or otherwise?
It's a difficult question, to be honest. I think,
and I know we are over generalizing.
So what I would say is that you have to make difference between Ghana and Nigeria first. Let's take Anglophone and then we take Francophone after. So risk appetite, Nigeria is much better than Ghana, for sure. Now, in terms of the opportunity set, it's clear that when you look at it, fintech in Nigeria is the biggie. Obviously, you heard about Money Point, exit of Paystack with Stripe, all these things. So it's really created a lot of appetite. And the market is big, but is it addressable? That's always where people get it wrong, right? And then unfortunately, there's been all these narrative about the middle income opportunity extra. I think you have to take it with a pinch of salt. So
there's almost like an overhyping of the market size in reality to
absolutely. In fact, that's I'm not sure it's overhyping by us. It's overhyping by
someone else. Investors.
So that's one of the things I've seen over the years. I think one of the things that deserved Africa in general and West Africa in particular is the over interest to some extent in Nigeria because of the size of the market, because of the population. Really, a lot of the innovations ultimately is Lagos. Lagos is probably 24, 25 million people today. So everybody assigns Nigeria to Lagos, right? Which is not the case. There are so many states in Nigeria. You go to the north, there's so many opportunities as well. It's just that they're not as hyped or looked at the same way, right? And so that's one part of the challenge. I think the other part, if you go back to Francophone, unfortunately, Francophone West Africa is underinvested by English-speaking investors. Okay, because of the language.
Say, are they the people with the most assets under management? Like,
no, I think what I'm trying to say is that in VC, in angel investing, etc., very few English-speaking investors like Americans or British, etc., actually go to invest in Francophone. So that means that the pool of capital for startups, etc., resume itself to French-speaking countries, Canada, France, mostly, right? And so the pool of capital available to outstanding founders is not enough, right? And so that's one of the challenges we've seen, notably at the French Tech. I used to be president of the French Tech here in Nairobi. There's a lot of unfortunate things like that where there's a lot of good entrepreneurs in Francophone Africa, even Central Africa here, DRC, etc. But they're overlooked by a lot of the English-speaking investors, which is unfortunate.
And I guess because of that language barrier,
correct,
you come with predisposed biases and you sort of fail to see such opportunities.
Maybe one point that a lot of people don't realize is that up until now, 70, maybe 60, I think it's more 70% of the venture capital that was coming to the continent was from North America. US in particular. So that means that as soon as their mindset changes, policy changes, or presidential changes, there's a lot of impact on the continent. And I did a little post on that not long ago. With scenario analysis for founders on my channel to really get people to get ready. Even before the result of the election, I was saying, look, if you're a startup in Africa, brace yourself if the Democrats get elected, this is how it's going to go. If it's the Republican, this is how it's going to go.
Yeah.
And our predictions are coming true, unfortunately.
Interesting.
Yeah.
And then maybe just to shift on Jaza Rift.
Yes.
So, after a while, you started focusing on, healthcare investing. I don't know how that sort of came about. So maybe you could just give us a brief about how it all started and, Jaza Rift.
So, wow, I'm a risk taker by nature.
Yeah.
Maybe I have to tone that down at some point. But so I was team leader for a GIZ project called Water and Energy for Food.
Yeah.
And I really had a good job doing interesting things on climate, renewables, etc. And I got approached by an incubator here called Vigro Africa that has been supporting healthcare innovation for the last 7 or 8 years then.
Mm-hmm.
They need somebody to help them design a fund, which I know how to do.
Mm-hmm.
And, came in as a consultant, supported them. And truly at that time, I was already reflecting as to what could I do for the next phase of my life that will have true impact. And remember, we're coming out of COVID. There was a lot of interest in healthcare on the continent. And at that time, I was thinking to myself, look, over the last, 8 years then, I've been back. I worked in agriculture, renewable energy, climate, agri-tech and related, water also. And I thought to myself, okay, I've seen a lot of industries, companies in the sector across Africa, 36 countries so far.
Yeah.
And what could be an area where it's hard, where I can really try and push something, right? Because I felt that, look, I've done a lot of things in those sectors. I've learned a lot. It's not as if I can't do more, but I felt like, let me do something new, okay? And so it boiled down to 2 sectors, education or healthcare.
Interesting.
And so because of that conversation with Vigro Africa, and also in my family, you have a number of doctors, etc. Even my mother is MPH, plus masters in palliative care, etc. My uncle is a gynecologist. I have an institute. So I was interested in the sector.
Yeah.
So that was my choice versus education. It's a tough call.
Yeah.
It's been a tough journey, to be honest with you, simply because unfortunately, the perception of healthcare in Africa is that it's a public good. Whereas when you talk healthcare in the US, people think dollars, money, right? Yeah. And so that's what we essentially set out to do. That's why the fund's name is Jaza, Kujaza, to fill the rift of investment, but also for the Rift Valley in healthcare, right? So Jaza Rift was started like that as, look, let's prove that we can generate returns, but also create impact and really having a model that works over the long term. As I said, it's been a journey. Yeah. We have had 2 near-death experiences as an organization. And then we expanded our reach as well. So we're not just now a fund manager, we are also a transaction advisor, and then what we call an innovation lab, where we're trying to help companies scale across different regions with my experience, for instance, right? And so on the investment side, we look at digital health, medtech, biotech, and assistive technologies, which are glasses, clutches, and things like that. Yeah. And mostly for humans, because they're also animal and plant biotech. And then in terms of advisory, we do most of the things that a transaction advisory firm would do. We have a mandate to value a biotech in South Africa. We're supporting strategy in terms of incubation acceleration. We do financial modeling. We do corporate venture capital and things like that. On the Innovation Lab, which is the last one, it's really about supporting global health companies, investors like the Gates, the MasterCards, and other similar organizations that are really looking at global health, like the Global Fund, actually. Yeah. And the idea is to provide them a space where they can test programs and innovations around healthcare on the continent. So, for instance, we're very, very keen on what we call growth pods. So, give you a very striking example that's valid for other sectors. Imagine you're a digital health company in Kenya. You want to scale to Ghana or Nigeria. Usually what you do is start calling up people, you do a discovery trip, you don't really know who to meet, etc., etc. You have to find the right team, you have to find the right regulatory process, etc. The idea of the growth pod is essentially to serve as a launch pad for all these companies for now in healthcare, but we're happy to work with other people, other sectors, agri-tech, etc., to help you de-risk that and navigate that faster. And the idea is to set up GrowthPod offices across different regions where you want to scale from Kenya to Accra. We have an Accra office. You land, we give you a space for 2, 3, 4 weeks, whatever. We give you the relationship to the regulators with your fintech, Ministry of Health with your healthcare, etc. And then we find talent for you, right? And also we can organize discovery trip to hospitals, clinics, if it's healthcare, and so on. That's the idea of the GrowthPod. Beyond that, we've got a few projects like Project Melezo, which is information or detail, where we're trying to figure out how we can create agents that's going to help us in the investment process, but that's going to help also maybe global health corporates or others to do discoveries of deal flow opportunities, right? Things like that. So that's what we do in a nutshell. Last point for Jaza, we've launched now what we call research pieces, where we're going to publish research on femtech. It's available on the website. So femtech is products and services directed to women. We did one on medical devices in Kenya, MedTech in Kenya. Another one on MedTech in Africa in general. And then we're going to publish regional ones, like country one, like in Ghana, etc., etc. So research piece is getting, because the key thing is data. And what we realize is that with our vantage point, we have access to a lot of data across the continent in healthcare through the companies we support, through our networks, through the different programs we see. And that can be really leveraged to demonstrate the viability of investing in healthcare on the continent.
Interesting. So just to take you back on the first part of Jaza, which is
the investment fund.
The investment fund.
Correct.
You mentioned that you had a near-death experience. I can imagine, someone sent you a term sheet, it did not materialize. You went into conversations and, you have you're burning cash, all that. Looking back, like, are there things you learned from, things you could do better in terms of fundraising? Because that's a space that a lot of African fund managers who are sort of interested are really struggling. And unfortunately, we still have to go to the global north to raise capital. Jump over the hoop of, all that cultural barrier, all that, relationships, etc. Do you see that, what were you learning? What have you learned that could be helpful for such?
It's funny because I make that as a parallel to founders. It's not when you need money that you need to call people. So that means that you need to be entertaining those relationships
way earlier.
So I'll give you daunting statistics for fund management. The average time it takes a fund manager in Africa, whatever the sector, to raise money, it's 4 years.
Wow.
To get your first close. Average.
Wow.
It's got extremes, right? But if you're an Africa-based fund manager, you want to raise...
That's like twice the...
More than twice the global average. 2 years.
2 years,
Wow. So, but remember, we have a double whammy on the continent. Meaning, it takes you longer to fundraise, number one. But those 2 additional years, guess what? You're burning cash. Where do you find it? That means that you need to do like us. You need to do advisory to pay your fees. That distracts you from the job of raising, going around, traveling, right? So if I have a recommendation to anybody who wants to go into fund management, raise a fund, make sure you have somebody that is ready to give you $1 million just for OPEX. Because if you do an average of, say, $100,000, $200,000 or $250,000 a year per year you raise, that's it, you got $1 million.
And that assumes you have a lean team,
You hardly pay yourself.
Because I can't imagine you have like more than 3
people. That's it. 3 people. So if you are 2 co-founding partners, then you have maybe 2 to 3 analysts, maybe some interns, etc., to support. But that's it. You're not making any real money. So it's a long game. And another thing that a lot of people do not realize is that when you're a founder, you have so many databases of investors you can reach out to cold calling. That doesn't work for a fund. You're regulated. That means that you can't just go and send emails to people you don't know on a mail merge or MailChimp, but it does not work because they can report you.
Yeah.
And then
As
that
a
means
fraud or
basically you can't do direct solicitation according to certain rules in the US, certain rules in Europe. The rules are on the continent are a bit varied, so you can still manage some things.
But also there's not much capital to chase.
So that's one of the appeals I did. I had the opportunity to be on CNBC Africa last week, where there was a conference about infrastructure. And what I literally said, which is valid for any sector on the continent, is we need to figure out a way to unlock the massive pension fund assets that are out there on the continent in local currency, ideally, to help finance our growth, right? 90% probably of the pension fund assets are invested, one, in government treasuries, both local and international to some extent. Why? And that's a question I always ask, why?
Yeah, why?
Yes.
And also, because I think I think partly if you look at the global north, I think pension funds and, all those teachers unions, they're quite active. They have active allocations into, startups and early stage.
I'm laughing because I've looked at that on the other side, and what I realize is like our leaders, pension fund managers or pension fund trustees probably have an average age of 70 years old or plus. Why would you want to take risk in alternative assets? Right? So that's number one. Number two, it's not just about the age, it's also about the awareness and the training. And as I mentioned, the risk aversion. Right? So one of the things that probably at some point, somebody at the AU level, etc., has to systematically go and train pension fund trustees and the pension fund managers on the benefit of diversification in alternative investments, right? I'm a KAYA certified, Chartered Alternative Investment Analyst. So I've advised organizations to do so, but I think at the pension fund level, this has to happen, right? Otherwise, we will still have the same conversations.
And I think it's also, there's almost like these organizations need a cultural shift because it's, I don't know if you can even teach a 70-year-old, or it means there has to be some sort of transition or some sort of sort of carve out of funds. Maybe a Spark or some sort of specialized VC for them, for the pension funds to sort of take those risks and
So I agree with you. I think there's two ways to potentially, and these are the ways I'm thinking about. One is on the regulatory side. If in a country, the pension fund regulator says, you must invest minimum 15% of your asset in alternatives. And if you do not, the fines are so big that it cripples your assets, then they will do it.
But also they shouldn't, a carve out, they shouldn't do that and then someone invests in hospital, right? So
I said alternative asset. I didn't say physical asset. So it has to be in vehicles that are approved as alternative assets opportunity instruments that they can invest in, right? But then if the beneficiary, which is maybe a fund, whatever, invest in underlying assets that are unfortunately potentially write-off, I don't know. That's another level, right? But I think saying you must invest minimum 15% of your pension fund assets in alternatives will be a wake-up call. Because for now, it's the other way around. They say you can invest up to 10%.
Okay. So it's a ceiling instead of a floor.
Thank you.
Interesting.
You can invest up to, but you can. They'd rather put that in safe assets.
Or maybe just put 1%.
You must invest at least 10% or 15%, whatever the number is.
And then on the second, so that's the fund side.
Yes.
Now on the second part, on transaction advisory.
Yes.
how is it different when you're doing it for like healthcare as a sector vis-a-vis other generic spaces?
So what I would say is that, so we do both. We mostly do non-tech advisory because we don't want too much friction with our fund management business when we're doing advisory on healthcare. Right?
Okay.
So exceptionally,
so this could be brick and mortar.
Actually, preferably.
Okay.
So the whole idea is to say, let's limit and not have conflict of interest with our fund management business, because the fund invest precedes C to Series A. Should we want to do advisory on tech in healthcare, it has to be post Series A, so that there's no conflict of interest.
Okay.
Right? That's number one. Number two, we've had the opportunity to do advisory to dental practices, to hospitals, specialty care, and things like that. That's what we prefer. But again, they're not that thousands of transactions, right?
Yeah.
What is also happening on the advisory side is we get it inbound of market entry. So products from US, Europe, Canada, Australia, etc., who want to come into Africa to solve a particular problem, a medical device, a diagnostic device, a product, and so on. So we're also trying to support organizations to do so.
Yeah.
But really, our sweet spot is things that are complex, medical devices, biotech, physical assets, as I said, specialty cares like cancer research centers and things like that. We look at partnering with government to set it up, or groups of hospitals to set it up as well. Yeah.
And for that, are you also seeing opportunities on the buy side in terms of transaction advisory, or it's mostly sell side?
No, I think the buy side also, but I must say, I don't think Jaza Rift is positioned, because really started this thing end of last year, positioned to be on the buy side, meaning, we got a mandate
Funds,
from, a private equity, whatever fund to come and look for asset. I think there's just one buy side informal mandate that we have. Essentially, we're looking for hospital physical assets in Tanzania to acquire, and we're looking at transaction about $6 to $7 million from one of our friends, private equity, and we're looking for assets in Tanzania. But beyond that, there's no formal really yet
approach.
At least yet.
And I like the way you've also like delineated, because you've said there's need for diversification if you're an African fund manager. But then also the investors will ask you for, this issue of conflict. So you've mentioned, you have this tech approach to the fund and non-tech approach to the advisory business.
I love that.
And then early stage versus late stage.
Yes.
Are there other ways you think structurally you can sort of, sort out this issue of conflict?
So funny enough, for me, it's less about conflict of interest. It's more about complementarity. I'll explain why. So overall, our thesis at Jaza is to say that the patient journey is phygital, physical and digital, because we're still in an environment on the continent where we are humans. We trust people more than we trust a machine for now.
For now, yes.
For now. So that means that when you look at a patient journey, you'd first go to a practitioner, a nurse, a doctor, etc., etc. And once you've developed the trust, then if that practitioner tells you, oh, now, when you have a problem, call me. You're happy to do the call, right? So that's the first step for us of digital health. It's not the phone, the camera. It's just calling your practitioner to say, look, this is what's happening to me. The practitioner knows you because you've had a physical relationship. So this one is physical to digital. But for some others, like us, we can do digital first, get 80% of the cases out, and then only go to a healthcare facility when you need it. Right? And so these are all phases around the phygital journey, because now there's a flux between physical and digital, where you can really have that service provided to you one way or the other. And one of the things we say is that for us, the best vision for Jaza Rift is whether you're at home or in the office or in transit, if anything happens to you, we should be able to bring healthcare to you and take you to a healthcare facility if it's needed. So that means that if you're in a village or you're in town or per-urban, one way or the other, we should be able to bring you healthcare to you.
Yeah.
And
through
then
this digital kind of
exactly,
approach. Yeah.
Because look, by the time we build enough hospitals and clinics, even in the whole of Kenya, it's like 40 years away. So that means that you have a hub and spoke model where you have a referral hospital, secondary one, and then in remote areas, you bring healthcare to people and people to healthcare so that those secondary or even primary are not too full of people who actually don't need to be there. If you can solve 80% of
and
the
you sort the patient ratio of the
absolutely.
doctor.
Yes.
It's a mess.
I don't know if I sort it, but at least it helps to solve it.
Or attempts. Yeah.
Yes, exactly. Yeah. That's the idea.
And then the third pot is now the growth. The
innovation lab, we call it. Yeah.
So I'm assuming someone has to pay for it. So you're looking into the gates, the big foundations.
Some of them we build internally with our own resources.
So how does it? Because even those relationships are not as easy to chase, right?
Absolutely.
So it almost like feels like another fundraising journey. So how do you sort of
So we've chosen an approach that is very simple. We want to build this from the ground up. We're not really chasing global health donors or whatever. We see opportunities. We say, let's work on it. I'll give you a very striking example. In Kenya, just like in Ghana, there's been countless biomedical engineers graduated, masters, bachelors, etc. A lot of those biomedical engineers actually end up abroad, right? Because they can't find job that match their skill set here. But guess what? Even those who are here, they end up, for instance, doing maintenance of medical devices in hospitals and clinics, etc. Right?
Yeah.
Most often than not, none of them
not on the design. They just do servicing.
Exactly. They do the maintenance, right, of these things. Very few of them actually have any sort of diploma or certificate certified professional certificate to maintain a GE machine, a Philips machine, whatever it is, right?
Yeah.
We did an analysis and realized that there's a massive opportunity for these young biomedical engineers doing the maintenance to get formally trained by the GEs, the Philips, and all. Because the one they're trained, they can come as a group and be a service provider to the hospital as a service, and where they can use also their service to other people. Because basically they're just doing, once you learn how to maintain a machine from one provider, one company to that, it's very similar.
There's a lot of transferability.
Exactly.
Yeah.
There's a massive opportunity here on the continent, but guess what? There's not enough money or appetite from those corporates to train, because to train a fully qualified biomedical engineer into maintenance takes 2 to 3 years, and it's going to cost probably $200,000, right?
Yeah.
But job creation is there. But we've not been able to convince any of those stakeholders to give us money to train these people in partnership with these organizations, right? So there are many, many other projects like that. We got one where, how do you navigate regulatory approvals today? Even in fintech or climate. Let's say you want to go from Kenya to Ghana or Nigeria, you have to go through a regulatory approval process. Why don't you have an engine, an AI agent that you can ask, okay,
what do I do?
What do I need to get? Okay, we know some hacks on how to launch from Kenya to Nigeria to Ghana without having to go through too many hoops there.
Yeah.
We knew some hacks, we knew how to navigate these things. But again, that could be a valuable tool. It's another project that we have. Guess what? We can't fund it for it. Right?
Interesting.
So we have a normal problem where we collect local data and we do analysis of that. Last project I want to have a conversation about is, today, it can be in Europe, US, Canada, a lot of these Western markets, where the fact is, unfortunately, Black and brown women are disproportionately affected by breast cancer. But guess what? Over there, you can go online or to a medical facility and then you can do a gene test, BRCA test, that will give you whether or not you have the gene that may create breast cancer. If you don't have it, you have less risk. But if you have it, you have to check yourself every year.
Yeah.
Because it's likely to express itself.
Yeah.
We don't have one test on the continent, maybe in South Africa now.
Yeah. Wow.
So that means that in our venture
studio... So does that mean, it means also if I want to get that, I have to go all over?
You have to send your samples outside.
Yeah.
Right?
Interesting.
Or in certain labs here, who can do the genetic analysis and figure out if there's that or not, right? But the key thing is, just like when there was COVID, we had flow tests everywhere. This can be done, even in remote areas.
Yeah.
We just need to get, one, the manufacturing, the various methods with an accuracy level, and then we can go to market and find a payer, because it's a payer problem, to make it happen.
Yeah.
That would be a massive healthcare opportunity on the continent.
Yeah. Interesting. My next question was, which space in healthcare do you feel is ripe for disruption?
That's
and
one.
I feel you've already kind of
I can go further. I can go further. Look, manufacturing of devices on the continent is a massive one. The other one, which is even crazier to me, is, and that's kind of a pipe dream, if I could get my hands on the top 10 university research IP across Africa around human health, animal health, plant health. Get that huge database and then partner with the university to spin those off. We have so many innovations on the continent. They're just sitting on desks.
What Lemelson Foundation has been doing over the years.
Yes, exactly, yes. And I think Lemelson is specialized on the medical devices and they're really great partners. Really, I have to thank them for the support they've given us so far. There are really massive opportunity to do research to commercialization through the tech transfer offices. There's so many outstanding research done. Most of them are sitting on desks, in offices, etc. And then also sometimes the frameworks to spin those companies out are not great. Tanzania has a great framework. South Africa has. Egypt has. To some extent, Kenya. But I think that's one of the... Look, if I had 100 million, I'll take half of that into that. It's like
great research no one knows about and hence can't be funded.
Absolutely.
And there's no incentive inbuilt.
And sometimes it even gets stolen by people from outside who change a little bit and then they launch it.
Yeah. And then, so you've mentioned the disruption around education, research, linking it to healthcare. Curious to know your thoughts around now. I think you've also mentioned it earlier. The fact that we were, and to a large extent, still are dependent on the global north in terms of
VC funding,
VC, and also to a large extent, even the grant side, the public funds. And we've seen a lot of shift happening in with the likes of the USAID, which proportionately were playing a huge role in funding healthcare. And even funding some of the universities in terms of research. So if you're looking at it from that lens, how do we sort of now become much more resilient and adaptive in terms of where we source for capital on the public side as well as on the private side?
It's a tough one. I think what I've noticed is VC funding has rebounded on the continent. But it's still a majority of the money that is coming out of the continent. So as I said, until we unlock massive pools of capital that leverages local and international money, that will not change. That's number one. Number two, on the public side of things, what I would say is that a lot of governments are not efficient. Even the American one, visibly. Dodge, right? But I think we have an opportunity to make things much smoother so that we can generate a much bigger pie to tax, number one. But I don't think tax should be the thing. And now we're talking microeconomics. I'm not an economist, etc. But I feel that sometimes we're not bullish enough, we're not bold enough to create the environment for growth rather than taxing. I know a lot of governments have taken on way too much debt, but I feel that, look, I don't want to talk corruption, but that's really what it is. There's way too much profligacy. Yeah. And sometimes, and I'll give you my perspective as an African that I went to the diaspora, I came back and really managed to do hopefully great things on the continent. I feel that when we talk about the 1%, which is the marginal improvements you can do for extended time is much better than the big banks.
Yeah, it's the compound
growth. Exactly. Compound annual growth rate.
Yeah.
But I think we need to reverse our mindset because, look, is it 70% of the 1.5 billion people that we are today on the continent are less than 35 years old? So if we do not pay attention, all these people who are coming to the workforce will find a place where it's very difficult to create jobs, right? That's why I was telling you, there's a massive opportunity in manufacturing, right? We cannot leapfrog that. Manufacturing means skills, means infrastructure investments, right? So to your question on, how can we get more capital or unlock capital, both local and international, it's really setting the right framework. And I'll give you one example. I don't know if it's the case for Kenya, but any angel investor who wants to put money in Ghana have to follow the GIPC rule, which is the investment promotion rules. That means that I can invest as a foreigner into a Ghanaian company less than $200,000.
Wow.
So if you want to invest in a startup in Ghana, even $10,000, you can't.
You can't.
The minimum you have to invest is $200,000 because they kept the law for mining companies, global industrial companies. So what I would say is that the AU, Smart Africa, whoever it is, has to thumb the fist on the table to say, look, this thing has to stop across a lot of the countries to make it much easier for a foreign investor who wants to put money in a company on the continent to do so. Obviously, you need to control certain things, fine. But as it is today, there's so many countries where when you put money in, already it's difficult to put money in. Forget about taking money out. Forget it.
Yeah.
Right.
Interesting. So it's frameworks. So that's the and also efficiency as
exactly.
well.
Capital efficient, cost efficiency. Look, Singapore, South Korea, Japan, all these leading countries have developed by putting in place the right processes and the education. Right? Yeah. I'll give you something that I mentioned not long ago, as I said, on the infrastructure side. There is an urgency for us in Africa and our technology leaders to harvest as soon as possible the massive opportunity that AI provides. One of the key ways is ensure energy sufficiency, build data centers, and compute. Otherwise, we're going to meet the needs to strain.
Yeah. I agree. I think, there are certain types of infrastructure that should be considered national security, right?
Yes.
Having them within your geography is quite advantageous and competitive.
Absolutely.
For any country and for any region. Yeah.
Absolutely. And on that also, in terms of infrastructure, it's good that we're building trans-African roads, okay? But when you look at countries that are massively developed their infrastructure and the ecosystem, like China, India, etc., it was rail. That's something I think also we're missing out. Imagine, I'll give you a case study that I've lived. Zanzibar. I was in Zanzibar with an entrepreneur. Before, for him to go from Zanzibar to Dodoma, it took him 2 days in total, door to door. Now it takes him 4 hours. Because of what? Zanzibar to Dar es Salaam train to Dodoma.
So you can go have a meeting, come back. Yeah.
Exactly what he did.
Yeah.
Exactly what he did.
Wow.
So I would say physical infrastructure, digital infrastructure, regulatory infrastructure.
Wow. And then as we wind up, there's you obviously are doing much more than the healthcare side.
True.
With now this talk platform, discussing, engaging founders, giving them, sharing their story.
Yes.
Maybe just give us a brief about it and what you're learning, what you're seeing around that.
Thank you. Thank you. I appreciate the opportunity. So in short, TOAC is Tales of an African CEO. And the whole idea was to say, look, I've spent the last how many years on the continent. And even when I was out of the continent, I was looking in anyway.
Yeah.
What I've realized is that the media out there portrays Africa in a way, and we all know it, that is not the reality of the terrain.
Yeah.
Right? Oh, war,
disease,
corruption,
famine,
diseases, and especially in North America, all these skinny kids, dying kids with a fly on their nose, etc.
Yeah.
It's really time we take that on board on our own and tell our own stories.
Yeah.
So that is why, after pushing back for some time, I decided to start Tales of an African CEO TOAC on YouTube, TikTok, and the rest of the socials. And the fundamental idea is to say, look, we need to tell our own stories of building innovative companies, building industries, captains of industry, creative, sports, all sectors, starting with the people I know, to tell our own stories, right? And so, for instance, today, I'm going to launch the conversation I had with Michel Adi of Jetstream. It's a very fascinating story. That means that we tell our own stories about our entrepreneurial journey. I also want investors, I want regulators, I want captains of industry to have those conversations as well, so that people we see ourselves also. Sometimes it's also about ourselves. We see ourselves, our people who can build innovation, do stuff from this side of the continent. And then maybe in a year or two, I also want to be able to portray African diaspora building incredible companies in the diaspora, over there, right? Because that's also another angle.
Exporting our
knowledge. Talent, yes. Our talent is out there doing great things. We also need to showcase them to people who are in Africa and the other way around. It's a two-way street. And one of the things that I've been on my mind regarding that for a long time is there's if I remember well, in Chinese, Mandarin, there's a word that designates Chinese from the diaspora. If I remember, it's Wozhen. What it means is that whether you're out there or in China, you're still a Chinese. You're part of the community. You're part of us. So whether you're African in Africa, you're also part of us. And I'll finish with one last thing that I think is a great lesson for me, at least, is after 10 years doing incredible, passionate things on the continent, it seems to me, that's me personally, it seems to me that it's not because you're Cameroonian that you have to go back to building Cameroon. It's not because you're Kenyan that you have to go back to Kenya. You can be a Ghanaian and you go and build an incredible company here in Kenya. It happened. I have a number of examples who've seen it, right? You can be Kenyan to go and build in South Africa. You can. So that mindset has to be more of a Pan-African, even global one, right? So I think that's one of the things I've realized, that it's not because you're from one particular country that you have to go back to that country to build. If you feel as a person and you see an opportunity in Mozambique,
you can attack it.
Go for it. I think that we should think Pan-African rather than even country or tribe. That's it.
Wow. I'm sure we
strayed away from here, but so
but I think to put it into perspective, I've learned a lot around angel VC journey, and then sort of honing it into a specialized, very challenging markets, sectors like healthcare, and then wrapping it up with sort of the need to also showcase these stories, right?
Absolutely.
Because if someone is doing something
great in his
Kumasi, in his very secluded area, the learning curve is quite longer for the rest of us. So
absolutely.
So thank you and for doing that, and of course we'll share all those details of those links and those discussions
Thank you.
on
Thank
our
you.
pages.
Thank you very much for having me. I appreciate it.
Thank you. And whenever you're around, I'm sure we'll talk more.
Yeah, my pleasure. My pleasure. You know, I talk a lot. So.
Thank you.
Okay. All right. Thank you.